what I'm looking for. So Andria Whalon with Comerica Bank, exceed expectations of what a bank can be.
Fantastic. Just quick, for you, I'm trying to help your business too. So put in my business, the YouTube channel, and then as well as Facebook, just for your information. So help your business. Okay.
I can't with the bank. I can't do Facebook. Yeah.
Oh, okay. I can do my through channel.
You can do it for me. Yeah.
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 So if you later, if you need my link, normally I provide through the meetup or whatever. But if you need specific, just talk to me. Okay.
Okay. Thank you.
Okay. Next brave person.
I'll be brave.
Okay.
My name is Ray Daniel. I'm with Fairway Independent Mortgage. We're one of the largest mortgage companies in the United States. I specialize and do specifically reverse mortgages for seniors. The solution I provide is that I'll allow seniors to access the equity in their home and turn that dormant equity into real cash dollars to help them in retirement. So I've been doing mortgages now for over 40 years. So some of you have not been alive 40 years, but I've been doing mortgages my whole life. So I'm here to help seniors over 62 access the FHA HECM home equity conversion mortgage. They can do it to refinance or to purchase.
Got it. Yeah, for you just who does not know that much of reverse mortgage, it's not all lender can do it because it's very, very niche solution, and you have to know understanding of the requirements is very different than typical mortgage. So, but Ray, gladly, he's the one. Okay, yeah. He's the one.
Okay. I did 35 years worth of forward mortgages. Now I'm doing about 7 years worth of reverse mortgages. So I've done both, but at my age, what I'm trying to do is help seniors. A lot of people through the pandemic have, lost what small jobs they may have had as seniors because of COVID-19. So they're really, nobody. We have the smallest percentages of seniors in the baby boom generation that are really ready for retirement. They haven't saved enough money. They're due to really need help. And the home equity they have is normally their largest asset. So I try to help them figure out how to make that last a lifetime.
Yeah, appreciate it. And just in case someone might join late, I'm going to ask an important question later to each about Ray as well. So, but it's just starting. Who going to be the third?
I'll go right on the heels of that because two reasons. One, Ray and I are same generation. We're both boomers. And
you look a little young to be a boomer, but
pardon me?
I said, you look a little young to be a boomer.
I hide it well.
He said nobody is 40, but I'm 40, just so you know.
Oh,
well, there you go.
Yeah. I know I look young.
You look like
you're in the bunch.
Thank you.
This is older than you.
I love your smile.
Thank you.
No doubt. I agree with you, Ray. Anyway, so thank you so much for welcoming me. I am actually out in the San Francisco Bay Area, and I have been in business like Ray for 40 years. I actually got my real estate license in California in 1979. So that's proof positive I'm a boomer.
Yeah.
Anyway, today I have a consulting practice, and I represent two different companies. One is Legal Shield, as Chris mentioned, and I focus in small business plans and business-to-business voluntary benefit groups. So I help employee groups protect themselves with legal plans and identity theft. The other company that I represent is a company called Stride, and Stride is a technology-based company that has proprietary and patented technology that I can sit down with any business owner and in 5 to 10 minutes with 6 to 12 questions, figure out if they are eligible for any specialized tax incentives. So owners of commercial properties or people with capitalized commercial property are great candidates for me. Any business owner that does any process improvement or development or creation, so manufacturing, technology, anything like that, transportation companies, medical companies, basically any Main Street business. You go down to Main Street of Austin, look to your right, you look to your left, typically I can help those businesses both enhance profitability, and during the last year, we have been saving thousands of businesses by providing them with liquidity that they can't otherwise get their hands on. Their business is in shambles. They don't qualify for commercial lending. They're waiting for PPP, or PPP is inadequate. And we can step in and help them with money that is owed to them by the government. We do this on a risk-free basis. No fees up front. And if they get no benefit, they have no fee. So I'm here to help.
Yeah. So I will let you wait a little bit
Yep.
for the table topic, and then you're gonna do it seriously.
Yep. You bet.
It's a heavy introduction. Okay.
Thank
But
you.
good job. Good job. I mean, that's good. And then we're gonna have a Q&A anyway, so don't worry. But just as I texted in the chatting box, if you hover over the chat at the bottom, please type your business contact information here, so that all the recording on YouTube, people can reach out to you. Feel free to leave this contact information on the meetup, my meetup event. You can type it there if you want. That's fine. Totally up to you. Okay. Okay. And then Jack, are you ready?
Hey, you already explained everything about me that there is to explain. I'm a retired real estate agent, and now I primarily just fix and flip properties. Not high gear. Right now I got 3 properties that I'm working on. One's going to closing next month. One's finishing up next month. Another one we're starting on next month. So we're slowly busy, which is a good way to describe it. But primarily we just use hard money or private money loans, buy the properties, fix them up and put them on the market. Typically a 20% profit, give or take. That's the goal. And usually we make that. With pandemic, we haven't been that fortunate, but we're pulling out of it now. So hopefully better days ahead.
Fantastic, fantastic. So it's a great introduction. It's myself. I want to make it brief. Most of you know me, but I'm an agent. Okay, just lessons learned. I can make, especially the resident home buyer, extremely difficult for time being. Crazy market here, 25% above asking price, still lost, not winning game. So, but I found a niche, my own solution to find a way. Very difficult, but I do have. That's me. So I do represent residential, commercial, both buyers, commercial leads like hair salon, restaurant owners, and just provide up to 1 hour free consultation, and then no string attached. So use me, and I put my keyword is I love camping. I'm a Google map, a local guy level 8, meaning is I travel a lot, international, local, and helping communities. And my wife business is home baking, so I'm helping her a lot. She uses me as a free service, but okay, just my favorite ice cream is vanilla. There's husband duty, unfortunately, but anyway, yeah, that's me. Yeah. So any question, let me know. You know what? There's 5 or 6 at least people and members. They really want to join today. They said unfortunately because of time. We Andrea, I talked, and then Bob last Friday, I think, decided Monday, which is not good. I think it's Monday. It's a tough schedule normally because Monday people are brain slow. They don't look for network meeting now. But many of them also, they have busy on Tuesday. And then thing is, these are almost end of the month. So many professionals are busy. But anyway, as I said, I'm going to have a series of meetings. Oh, this is not part of the introduction. It's so let's do any any quick question before start for the table topic discussion? Anybody? Nobody, right? So let me introduce Andrea. As I said, she mentioned Comerica Bank. She's been in the industry for a long time, and I know her very well. Her service is excellent, and you can count on her. And then not only today a HELOC, I hope she can cover that. That's a main topic, but also she can do SBA loan and PPP, but many different solutions for the commercial, of course, the residential, but many solutions for all the business professionals. Okay, Andrea.
Thanks, Chris. So Comerica Bank, we've actually been around for 150 years, and we help on the residential side and commercial side as well. But what I really want to talk about and what I think we have one of the best products is the home equity line of credit. So for bank jargon, we call it the HELOC, but when I'm talking to customers, I'll say home equity line of credit. Right now, we do have a promotional rate that I think is amazing. It's 2.24 annual percentage rate for the first 6 months. And then after that, at a variable rate, it's 4.25%. After the 6 months, you are able to lock it in as a fixed rate. So I always share that with my customers. A couple of things that I like about the home equity line of credit is that you have 20 years to pay it back and you have 10 years to draw on it. Here in Texas, we're able to draw up to 80% loan to value. So when you think about Austin, or we can even say Lakeway, we know how much the houses are. My light just turned off, sorry. So we know how much the houses are. So it's really, really good. A lot of my customers that are getting it, they're getting it for emergencies. They're getting it to remodel their home. They're getting it for new business owners that are starting up. So business owners that haven't been in the banking industry for 2 years. Parents are getting it for kids that are going to college. We think about us, eventually we're going to retire. So before you retire, you're making your income, you have enough money. So after you retire, are you still going to have that much money? So it's good as a backup plan. So I have a lot of people that are getting it close to retirement, weddings and funerals, and also just having it, just peace of mind. When we look at a credit card, everyone knows credit card interest rates are killing our customers. They're 22% and up. With the home equity line of credit, let's say that they are approved for, let's just say 200,000, and they only want to borrow 20,000. Then they're only paying interest on that 20,000. So you can't beat it. The rates are really, really low. Also with the banks, if you are applying for a home equity line of credit, you want to make sure that your debt to income is under 45%. A lot of people do not know that. If your debt to income is over 45%, you will be declined. So that's just key pointers. Also, you cannot be late on any of your payments. That's something that we will check, and that's for business owners and personal. We obviously will check your credit. I can't necessarily say if your credit is at this, you can be declined. One of the things that we do here at Comerica is we look at the full financial picture. So it's not just about your credit score. It's not just about how much your house is worth. We look at everything. If it's something that we aren't able to do, I will look into a solution of what we can do to help you. So moving over from the home equity line of credit, Chris wanted me to talk about business. So Comerica, we are a business bank. So one of the things that I do is I've been reaching out to, I want to say between 15 to 40 business customers a day to see how I can help them. And when I'm reaching out to these business customers, I'm not calling to talk about a checking account. I'm calling to understand what their goals are for 2021. How are they managing their cash? How are they managing their growth? And also, how are they protecting themselves from risk? We're seeing a huge increase in fraud right now because of COVID. We are helping between 7 to 10 people a day with some type of fraud. So you want to make sure that you are protecting yourself. Share this with your customers, share it with your family, protect yourself from fraud. That can be online banking, that can be writing a check, that can be using your debit card. Just, look at your accounts online. But with the PPP loans, they just extended that until I think May now. So that's good for business owners. Comerica is able to help with the PPP loan. The applications you can do are online. As far as the EIDL loan, that is the disaster loan. One of the things that I'm seeing businesses struggle with is a lot of business owners went and got the EIDL loan. So when we think about the EIDL loan, that is for disaster. If you go, or if you know someone that's going to get the disaster loan and then they come to the bank and they want to apply for any type of loan, that EIDL loan is going to be considered income. So if they are applying for $100,000 for a line of credit and they got $50,000 for the EIDL loan, they cannot get the 100,000. The most that they can get with the bank is the EIDL loan. So I tell my business customers to only get the EIDL loan if you really, really need it, because it's not forgiven. The EIDL loan does have low payments, which business owners like. I've seen them to be, $100, $200, but it's for 30 years. And so I just tell my customers, nothing is free in life. Why even get the EIDL loan? Well, you can go to your bank and get a line of credit where it's going to be beneficial. For the PPP loan, any business customer that needs the PPP loan, get the PPP loan because it's forgiven. So that's the difference from the EIDL and the PPP. With Comerica, we do specialize in the SBA Express loan. That is with the government, so it is SBA. So it's more for our business customers that do not have collateral. And what I mean by collateral is that they do not have equipment. And with the equipment, it has to be new equipment. They do not own a building. So what we do is we use the SBA, and business customers can get it if they want to advertise, if they want to hire new employees, if they just need it for an emergency. So that's pretty much all that I have. Does anyone have any questions for me around home equity line of credit, EIDL, PPP, or the SBA Express?
The good thing is, thank you, Andrea.
You're
The good
welcome.
thing is you don't remember, you don't need to remember everything. You
No.
only remember Andrea name. And then
Yes,
if you
call
have
me.
a customer, okay, if you work at, hey, I know someone who can explain to you, okay? That's
Yes.
the beauty of the network. That's the beauty of a referral, okay? Just remember the keywords she can provide. Oh, Andrea, quick question. Can you help Austin clients, but do you do other area in Texas or other, can you do that or?
Anywhere that Comerica is located. So California,
California? Wow, okay.
Florida. We're
Bob,
in
speak.
Texas, California. Who's in California? Yes,
Bob, yeah.
a lot of Comerica's there. We're in Houston, San Antonio, Dallas, Kerrville. So yes, but I'll help any customer that has questions when it comes to banking. So I've been in the industry for so long. My goal at the end of the day is how can I educate people about financial literacy? So that's renting versus buying, retirement 101, managing your credit score, whatever it is, I will help. I have no problem with that at all.
It's beautiful, Bob. That's one of the reasons why I'm trying to invite other non-Texan professionals like Bob. I'm trying to do a Boston and next event, okay? The reason why you never know, see?
Mhm.
And then it helps each other, by the way, because your client might be in Florida or even you're not here, who knows, okay?
Exactly.
So that's where, and then before forgetting, Andrea, you mentioned the other big banks, Bank of America, whatever. Okay, so they're not doing that HELOC, okay? You mentioned, I think, to me, right? So that's one of the big advantage of working with Andrea, just in case, don't give up, okay? Just ask Andrea first and then figure out.
Yeah, a lot
Anybody
of the
question?
banks aren't doing a lot of things due to COVID.
Yeah,
So
okay. Anybody, any question to Andrea? Well, of course, after this, we're gonna do a Q&A later, so don't worry too much.
Okay.
But any quick question before moving to the second topic? Okay, so Bob, so all yours now, and yeah, talk about, so Bob and I met through Alignable, so biggest referral network, and we had a one-on-one. The funny thing is, we are not physically in-person meeting, but I met him and a lot of common ground, surprising. I mean, and you know, my background is South Korea, right? And he knows South Korea very well, and he knows the industry, the professional, the boundary is very, you know, very common. So kind of already friend. So Bob, can you talk about your solution?
Thank you so much, Chris. So as I said earlier, I've been in business for 40 years. The first, after I got my real estate license, I left that industry because that was right when interest rates were going from 9 to 16% for home mortgages. So it was kind of a tough time. Ray, you might remember that.
Very well.
Anyway, and then at that point, I got in the investment industry in San Francisco. I was working in the financial district, spent 25 years as a bond trader and a portfolio manager before leaving that industry in the early 2000s, and ended up here as a consultant. The interesting thing is what led me to Stride was the fact that I had been focusing on Legal Shield and looking for something that would help me acquire more clients. And after 40 years in business, what I found is that Stride's proprietary technology is the best client acquisition and client retention tool I have ever seen for business and commercial clients. So I'm gonna share my screen here. I'm gonna
Sure.
put up
Go
a,
ahead. Yeah, I
um,
think I made your.
yeah, thank you.
Oh, yeah, so you can share now.
Yep. Okay, so this is a self-serve tool that I can email to anybody in the country. All right, we work in all 50 states, so wherever your business owner clients are, I can help them. And you can see here that this searches for programs. It's literally plugging in on a real-time basis to local, state, and federal databases and searching for specialized tax incentives. So when we go to this, you can see there's qualifications for benefits fall into two categories, those of employers and commercial property owners. And so for right now, I'm going to do both, so we can just get kind of an idea. All right, so industry, we'll use manufacturing today. And employees, we'll say they have 100 employees. And we'll say that they have a reasonable turnover, about like most companies, about 10%. Payroll, we'll just assume they average about $50,000 per employee. So that's $5 million in payroll. Is my math right? Somebody? 5 million, right?
Hey guys, I've seen this. He will show his demonstration. How can he help the building owner, business owner to save significant tax
Right.
in terms
So
of property tax aspects? Yeah.
we're going to say they own 2 properties,
Mm-hmm.
and the combined value of the 2 properties is $8 million. And property taxes, what would $8 million in commercial real estate be taxed in Texas, somewhere in the Austin area? Anybody?
400.
2.8%.
Yeah.
2.8%,
Yeah.
so around $200,000, correct? Roughly.
Mm-hmm.
All right, that's close enough. All right, so when we hit calculate, this comes up with an estimate, as you'll see here in a moment. So employer estimated benefits of $272,000 and commercial property benefits estimated at $625,000. So the next steps for this for the client would then be to decide whether or not to book a call directly or to start working on the self-serve portion. We're going to assume they pick self-serve. Company name, we'll just use this one right here, since it's already here. All right, title, we'll put that we're talking to the owner. And you can see here, we're going to confirm. We're looking at 897,000 in benefits. Now it's going to ask for a little more information. Congratulations, Bob. We've identified 4 areas of potential savings. All right, so company type is an LLC. $8 million in property owned. Oh, but there's also been some renovations done on this manufacturing plant. They did $1.5 million in renovations. All right. They've had revenue for more than 5 years. Estimated annual processed in credit cards. I'm only going to put something here just so you guys can see. Let's just say they take $5 million in credit card payments a year. And monthly waste expense, it's a manufacturing plant. So yeah, they spend about $2,000 a month in waste. And annuals workman's comp, again, it's a manufacturing plant. So yeah, they're probably looking at something close to, they're not self-insured, about $100,000 a year in workman's comp premiums. All right, so
just quick piggybacking on that, he's demonstrating a big property case, but even small business he can help as well because of also the saving, because these solutions work with collaborating with their designated CPA. It's not getting rid of their CPA, but because a CPA does not know all kinds of things, there might be a blind spots. But this tool checking everything from federal, state, city, whatever. Okay,
right,
that's
exactly.
why it's helping the CPA get a better insight.
What's a local zip that you guys have? No,
78701.
say one more time.
78701.
Thank you. And the reason I asked that is because the database literally will plug into your counties or this county's. Now you can see here that the number's gone up from almost 800,000 to over $1 million. Part of that is because of the $1.5 million in renovations. That commercial property benefit went up. You see the benefit for that alone is 700,000. Okay. So at this point, what we do is we go right down the list and look at each one of these. You have hiring incentives. Most hiring incentives result in federal tax credit from something called a workers' opportunity tax credit. The waste and recycling is an audit we do. We negotiate a better price with your provider. And we know historically that we can do this because we've done over 1 million of these studies in the last 17 years. We do a workman's comp audit. History shows that about 70% of people that pay a workman's comp premium are overpaying. We do a credit card merchant audit because the FTC says that people that subscribe to merchant payment, you know, like your convenience stores and stuff where you swipe your card, they overcharge by 15 to 30 billion with a B, $billion a year. R&D tax credits. This is something that the IRS says 1 out of every 9 employees in America qualifies for an R&D tax credit. Any employee that creates something new, whether it's an IT program or a process improvement, you organize things to perform more efficiently, any of that qualifies. We have the in-house engineers that can do that audit and produce that. Again, we share that, as Chris said, with the company's CPA. We're not trying to get them to change anything. Property tax mitigation. I don't know about you guys, but I haven't ever met a business owner that doesn't think they pay too much in property taxes. So we do an audit and we will go to the municipality or the county, and we use our specialists, our attorneys, our accountants, and we do the appeals process with them. And history shows that with a $200,000 bill, we can probably save them $33,000. And then the last item here, commercial property owners. There's something called cost segregation. I don't know if you guys know about that, but most commercial property owners depreciate their asset on a straight line 39-year depreciation. But the components of that building or the remodel don't all last 40 years. So window coverings, floor coverings, things like that, they don't last 40 years. So the engineers put them in the right classification, 5, 7, 10, 15-year buckets, wherever they belong. And that net present value is what creates this $703,000 in savings. So the
What
next,
I like about his solution is even the hiring incentive, they can, this tool helps the owner or business owner to what the individual employee they have to select to maximize that's the tax incentive potential, correct?
yeah, so what Chris is explaining is that that program actually started after World War II to help veterans go back to work. It's been changed and updated many times. Now, aside from veterans, it also helps people on aid-dependent children or coming off of unemployment. It helps felons coming out of prison to go to work. The government provides incentives for all these groups, and all the employer needs to do is send an email to the prospect or the hiring candidate and have them put in their name, address, their social security number, and the job title they're applying for. And the system automatically comes back with what kind of incentive they may receive. So you might have 3 candidates, all equally qualified. You're trying to decide who to hire, put them through this, and candidate 1 has 0 credit. Candidate 2 is worth $1,200 in credit. Candidate 3 is worth $9,000 in a payroll tax credit. Which one's the best hire? So that's what that's designed to do. And when it says who will activate, this is where the owner gets to say, it's going to be my HR person. So you add a contact, you put in the HR person stuff, and all the correspondence goes back and forth between the HR person so that the owner doesn't have to be bothered by that. When you go to the next step process in cost seg, you're going to want a depreciation schedule. That's going to come from the CPA. All of these things are then parsed out to the experts that can help us with that so that the business owner is not inundated with all of these responsibilities. Okay? So that's it in a nutshell. They can literally activate right from this screen, or they can call me. That's really the best way to introduce people. We also have something, and Andrea knows about this, it's called employee retention credits. So we all heard about PPP loans. And when this first came out, the CARES Act in early 2020, you either had to pick PPP loans or employee retention credit. You couldn't take both. And most opted for the PPP loans because they were forgivable, they were much easier to understand, and they were going to be more money to start with. What happened was the last legislation passed by Congress at the end of 2020, in late December, was they okayed companies that took PPP loans in 2020 to also be eligible for employee retention credits. So even if they took PPP, they can also get employee retention credits. And those went from $5,000 max per employee to $14,000 max per employee. So that's a huge jump. The big significance here is PPP is still a hassle to get and only goes to select people. Andrea could tell you all about that. There's only about $285 billion with a B, 285 billion in the PPP pool. In the employee retention credit pool, there is $2.3 trillion. So anybody that has had a revenue decline in 2020 of at least 20% in any one quarter and has 500 employees or less, those are the basic qualifications for employee retention. If you know anybody like that, anybody working for a company like that, your next door neighbor says, oh my God, I don't know what's going to happen. I don't know if we're going to be employed next month or not because the business is struggling. Give them this tool, emergencybusinessrelief.com, and have them show it to their owner. They can literally qualify for hundreds of thousands or millions of dollars, just as you saw. And I can help people anywhere. We don't charge up front. We do this all on a contingency fee basis. They only pay us on the back end if they get money put in their pocket. If they don't, they owe us nothing. So this is completely risk-free. The rest of it is that beyond this technology, we help these clients with commercial lending, with venture capital, with non-qualified retirement planning, with exit strategies, with key man, buy, sell, all kinds of different services can be accessed after this. And so I can help professionals that are CPAs, commercial realtors, bankers, lenders, attorneys, in terms of acquiring and retaining clients with these tools. So any questions, please feel free to ask. Thank you so much for your time and attention.
Bob, thank you so much. Any quick question to Bob? Yeah, what I like is about no upfront cost. So when I heard about 2 trillion and I'll worry about the cost, but no upfront cost. So is it get the free consultation first and go through with Bob. Of course, you don't need to remember everything. All you need to know is Bob's contact information. Ask Bob, oh, I have a client, can you talk to him, okay? That's all you need to do, okay? Anybody, any quick question to Bob? Otherwise, I can have question for him. Oh, because of time, let's switch and then I'll come back to you, okay? So Ray, thank you again. I known him for a while, and then he been a speaker to other group as well. As I said, reverse mortgage. Oh, anybody so busy, then let me know. Can just wave your hand. We understand, okay? So Ray, could you come up, short about your service, what you can provide, reverse mortgage? Not many people know about reverse mortgage, by the way, but you can tell us about a little bit so we can remember.
Yes, absolutely. I think what I'd like to do is kind of compare what I do with what Andrea does. I think the biggest differential is that HELOCs are a great opportunity for people that are 21 to 62 because they're in their earning years. None of you have gotten, well, none of you have gotten to your retirement years, but the maximum, if you made lots of money during your career for 35 years, your Social Security benefit will be about $3,200. If you paid in $3 million over your business life in Social Security and Medicare taxes. So that's the top amount of Social Security. And think about trying to live on $3,200 from age 65 until 95 for 30 years. It's not going to be that's not going. I got something came up. Let's see.
Oh, sorry. It's my poll about you guys about.
Oh,
yeah. Sorry, I interrupted.
okay.
It's just I forgot, so I just did it. But I'm sorry. Go ahead, Dre.
I can't see myself talking. So.
But that's okay. I mean, you can ignore it. Just it's not that important. Yeah.
Yeah. I'm trying to submit it. No, do that.
Yeah.
Okay.
Just yeah. Okay.
Anyhow, the biggest differential is when we issue a reverse mortgage, which is insured by the Federal Housing Administration, FHA, no payment requirements for the next 30 years. I don't think Andrea can say that on a HELOC. That's the beauty of this, is a senior benefit provided by the federal government that allows you to refinance your home and take out 50% of the equity in your home and convert it to cash without having to pay it back until 1 year after you're dead, which is a pretty good time to pay it back from your own personal perspective, 1 year after you're gone. So, i.e. the estate handles the loan at that point. In essence, we roll back the accrued interest into the mortgage over a 10, 20, 30-year period that the senior lives in their home. The other thing is they're super easy to qualify for. We look somewhat at credit, but they're really looking at, did you pay your taxes and insurance for the last 2 years on time? Because that's the key default trigger in a reverse mortgage. The senior has to pay the taxes on their home and the insurance on the home while they live there, because those create a lien against the property. So But they would have to pay those even if they owned it free and clear. Otherwise, they would lose their home to the taxing authority. So, and then we look at, we do not have a debt to income ratio, no 45% debt to income ratio. We basically look at, do they have enough to pay their taxes and insurance from their Social Security account or their payment, Social Security benefit, and any other long-term debts that they have, car loans, big items, not little items. The qualification is, I mean, I can qualify people for $100,000 loan on a $1,500 Social Security payment. So it's a whole lot easier than a forward mortgage in terms of qualification. So the key is they have to be over 62. The older they are, the more money we can lend them. That's kind of opposite to logic, but that means they have less years to live, and therefore they will accrue less interest over the lifetime of the mortgage. So, and our interest rate today, we do these as ARM loans. They're constant maturity treasury for 1 year, adjusted monthly at a margin of 2.50 plus the current 1 year treasury rate, which is today 0.07. So the actual rate is 2.62 today. That's a fairly good interest rate. It's like Andria's opening 6-month interest rate. And that's adjusted monthly, but you're not paying it, so you don't really see it. It's not like it's affecting your cash flow. It's just affecting the amount that you accrue to your mortgage. But you never have to pay it back. You only have to pay it back when you leave the home, you sell the home, or you die. So that's about as simple as you can get in terms of the basics of the program.
Great.
The one thing that realtors don't know in general is that you can use a reverse mortgage to buy a house. If I live in San Francisco and I sell my house in the East Bay for $850,000 for a 1,000 square foot house, you can come to Texas and buy a 2,000 square foot house for $400,000. You can take and make a down payment of $200,000 on the $400,000 house and put the $650,000 in your pocket and never have a payment on that mortgage for the rest of your life. So I'd recommend everybody in San Francisco move to Austin, Texas. Doing it.
And use me as a realtor too. So Ray, I think that's a beautiful example, and not many people know about that. And then a 62 years old senior who can buy a property using the reverse mortgage. I never knew that. Using the reverse mortgage, 50% down, and then they don't need to pay the rest of their life, right? Correct?
Right. No payments for the rest of their life.
So-
They still have to pay taxes and insurance only.
Yeah.
But
So
no payments
that's
for the rest of their
nobody
life.
knows it. So
Well, I can go in a realtor's office in a sales meeting with 80 realtors, and maybe 3 people will raise their hand and knew that that was even available, much less how it works. I've been doing this to be quite honest, Bob, I've been doing this since 1971. I got my law degree in 1974, and I got my real estate broker's license in 1974. So that's 46 years, I guess. I've been overeducated in my life.
okay.
Wow.
So again, thank you, Ray. So any quick question, Ray, to jump to the next? So we're gonna wrap it up soon, but any quick
How did
question?
you become such an expert on East Bay real estate, Ray? You were right on the money.
Yeah, I've been to all of East Bay. I used to buy loans from San Francisco and
Oh, okay.
Danville and, all along the Silicon Valley corridor over there.
Got it.
And it's all land value. The house is not really worth much, but the land is worth 700,000. The house, if you had to rebuild it, would cost you 150.
Well, that used to be true. But-
Yeah,
But
yeah.
today builders are charging like $800 a foot to build. It's crazy.
Are they really? That is crazy. Well, you can buy houses all day long over here. First time home buyer houses in the 280 to 350 range that are 1,800 to 2,400 square feet. And put in a pool and enjoy your life.
Okay, thank you again, Ray. So Jack, just before we're gonna do a little Q&A, as I said. But Jack, sometimes you do syndicate with the partners. And then Jack, sometimes he go a field trip, like a foreclosure auction site. So many investors around me, they have a question about it. So if you know someone, well, of course, Jack also agreed to, right? But of course, what I'm saying is, if you're somebody interested, let me know, or, let Jack know whether he can, sometimes he go there, so, they can join if Jay allows to. Jack, right?
Correct, correct.
Yeah, so he goes, you go sometimes around Georgetown auction, the foreclosure.
Well, the foreclosure auctions are the first Tuesday of every month in Texas. So each county has their own one at their site and everything. So it's either Georgetown or downtown courthouse in Austin. Those are fun to go to, but when you buy a foreclosed property in Texas, you got to have the cash on hand, like literally a certified check, or you wouldn't want the cash, but certified checks and buy it on the spot, which is unusual for most of the other states. You got a little bit of time to get the money. You put 10,000 down or something. So here, if you buy a house for $400,000, you better have $400,000 in certified checks in your hand. So it really narrows down the competition, though.
Yeah. Again, Jack is an expert on the fix and flip. A lot in San Antonio, Austin. So as I said, if you have someone who really need that information, but don't harass him, but you can ask him about, okay.
Oh,
hey,
feel free to call. And Chris and I have talked, I'll be doing a future presentation on primarily online auctions. There's a wide variety of websites out there, like some of the, really off the chart ones are like the U.S. Marshal Service. They repossess a drug lord's house. They auction it off. So it's pretty, there are some really crazy off the wall ones, but your primary ones, there's a lot of online property foreclosure auctions that can be very, very lucrative. So Chris and I are working on that for one of the future presentations.
Yeah, sure, that would be awesome. So yeah, we are almost like 15 minutes already past. So any question, anybody before wrapping up, feel free to use a chat box, leave your comments, whatever, okay? Any quick question?
I need to ask Andrea, are any of the banks doing reverse mortgages within the bank? I don't.
I know like the bigger banks are not. In Comerica, we don't do them at all.
Yeah, well, the biggest lenders at one point in time, probably 15 years ago, were Wells Fargo and Bank of America. Got in the news for foreclosing on seniors, and they immediately sold their businesses off. And
Yeah.
I don't know of any banks that are doing them.
Yeah, I worked for Bank of America for 8 years. So before I left, I know we weren't doing it at that time anymore.
Right. Well, the program's changed a bunch since then, so it's a lot better program. But still, the big banks, it's just such a niche. There's not enough volume to make it worthwhile.
Yeah, like we're not even doing refi cash outs either.
Oh, you're not?
Nope.
Well, this is a cash out refi that you don't have to pay back. So that's
Yeah.
the kind.
Yeah.
Any further question? Just one thing about Bob's solution that he mentioned about big deal case, but even small business like, for example, sushi restaurant owner is a lessee, is not the building owner. Still, if he has a part-time, full-time, 7 employees, one of my client cases, they also can be suited for analysis. Of course, a little bit low tax saving incentive, but still is a try worth. Bob, right?
Yeah, thanks for pointing that out. If anybody who's a lessee has done over $250,000 of improvements on their space, they could qualify for cost segregation. Anybody with over $500,000 in annual salary, that's a manufacturer or tech company, could potentially qualify for R&D. And those are really unusually low numbers. To give you an example, Westinghouse was turned down by their big four accountant Coopers or whatever it was to do a cost seg because they only had $70 million in real estate, and Coopers required 100 million. Yet we can do it down to 250,000 on a reno or 500,000 on a purchase. Same thing on the workers' opportunity tax credits. The companies that do that full time want to see 250 hires a year. You can make it cost efficient for somebody who hires 2 or 3 people. So we can help small and medium-sized businesses in areas where most companies can't even dream about having a real conversation.
Okay, Bob, thank you. Any last question, last comment? Again, I'm going to post in YouTube. Just let me know whatever, and then let's use a referral, help each other, okay? So if you need any person contact information, check the chat. If not, just let me know. I can provide all the information, and feel free to use me, and then pay attention to the next event. Any last comment or question?
Good job, everybody.
Yeah, thank you. Thank you, Bob. Thank you.
Yeah, it's
Andrea.
a
Thank
tough
you,
morning,
Jack.
and get your coffee and get a grab of a bite and keep rolling.
Thanks. I got to go to another Zoom call.
Oh, yeah, sure. Yeah. Thank you, everybody, and see you next time, okay?
Thanks all.
Bye-bye.
Thank you, Jack. Thank you, Bob.
Nice to meet
Thank you,
you.
Andrea. Thank you, Ray. Bye-bye.
Bye now.